is higher against the euro and pound on Tuesday. Meanwhile, risk-off sentiment is boosting the yen across the board. Now, euro-yen fell to a 4-month low on Tuesday. Meanwhile, Australia's dollar tumbled to a 3-week low after its central bank raised concerns about domestic labor conditions. Now, the RBA left its benchmark rate unchanged at 1.5%. Here in the U.S., there is some caution ahead of President Donald Trump and Chinese President Xi Jinping's meeting at the White House later this week. And on the geopolitical front, Monday's suspected suicide bombing in St. Petersburg, Russia, saw minimal flight to safety. Now, in a big week for U.S. economic data releases, we got the U.S. trade deficit, and it did sink nearly 10% in February. The deficit fell to $43.6 billion in the latest reading, helped by a surge in exports to a 2-year high. And this did come amid a decline in imports of autos as well as cell phones. Now, this data comes amid an improvement in the global economy as well as the softer U.S. currency. In New York morning trade, euro-dollar is off 0.1% at 1.0655. The pound against the currency is lower by 0.4% at 1.2438, while dollar-yen is down 0.5% at 1.1036. Now, the dollar against the Canadian currency is bullish this morning. That pair is supported by its rising 50-day and 20-day moving averages. That pair has also broken above a declining trend line and remains on the upside. Long positions above 1.3365 are preferred, with targets at 1.3480 and 1.3510 in extension. And in New York morning trade, gold and silver prices are higher. Now, gold is in the spotlight this morning, and the rising 28 and 50-day moving averages play support rows and maintain the upside bias. Now, long positions above the 1254.40 level are preferred by trading center analysts, with targets at 1260.98 and 1263.50 in extension. Meanwhile, silver is up nearly 1% at $18.39. That does wrap it up for this morning. I'm Remy Blair reporting from the New York Stock Exchange. Make sure to follow us on Twitter at Trading Central. Have a great day.